Good morning. Welcome back to Venture Daily. On today's show, how will the big beautiful bill affect venture capital? We have more job movement news, people getting hired, people getting poached, people leaving their companies, and the moa bird that's been extinct for hundreds of years is being brought back to life. I'm Jackson Fordyce. It is Wednesday, July 9th. Let's get you smarter before your first meeting. I forgot to mention this last episode, but it'll be just me in the studio for these next couple of days. Josiah will be returning to us, I believe, Friday, but don't quote me on that. It might be on the Monday, but we miss him here at Venture Daily. Let's go to the split screen here. Actually, no. Here, there's no one. It's just me. When I go here, it's me, but then when we go to like the dual monitor here, just me. Unfortunately, but it's okay. We have a great show today. Going to be diving into a couple different topics. The first story that we're going to hop into today is President Trump signed the big beautiful bill last week on July 4th into law, a sweeping domestic spending and tax package that's already making waves in the startup and VC world. Here's an article written in PitchBook by Kia Kokolacheva and Jacob Robbins, what Trump's big beautiful bill means for startups and VC. So some of the big wins here is the QSBS expansion, which stands for Qualified Small Business Stock Exemption. And so here's some of the big initiatives that are happening in this bill. The holding period has been shortened with a tiered schedule. So 50% tax exclusion after 3 years, 75% after 4 years, and 100% after 5 years. And the eligibility threshold for a qualified startup has been raised from $50 million to $75 million at time of stock issuance. So right off the bat, two pretty big wins, and we'll get into what those actually mean a little bit later on in this segment, but not everything is great here. So first, Trump is taking a swing at elite universities, increasing taxes on endowments. A new tier tax structure shows now schools like Harvard and MIT have rates as high as 8% per student, and Harvard says this alone could cost $200 million a year, and that might mean less venture capital flowing from university endowments. Another thing of good news, R&D deductions are back. The bill reverses one of the most painful parts of Trump's 2017 tax reform, the rule that forced startups to liquidate R&D spending, and the AI moratorium is gone. We mentioned this on Monday. The 10-year federal block on state-level AI regulation pushed hard by tech industry was stripped from the final bill. We talked about that with Kira Shishkin on Monday's episode of Venture Daily, and some other ripple effects that we need to be watchful for. Healthcare startups could get squeezed by Medicaid cuts. The EV tax credit disappears in September, which means that will hit electric players like Tesla and other like Alto and Waymo and things like that. And clean energy startups take a blow as solar and household upgrade credits are wiped out. So Trump's big beautiful bill has clear wins for VCs and early stage founders, but if you're building in health, climate, or mobility, you'll want to read the fine print on the bill itself. But for more on this story, I spoke with Mike Dauber.
Mike Dauber, I'm a general partner here at Amplify. I've been here going on 11 years end of this month. We just raised our sixth fund, which is $900 million across 3 separate funds. And yeah, excited to be here.
For my first question with Mike, I asked him, the expansion of QSBS, Qualified Small Business Stock, is a big win for VCs. Does this unlock a new wave of early stage investing, or will high interest rates, like we mentioned earlier, still keep capital on the sidelines?
I think that's a great question. I don't think it will make a huge impact in the interest in investing in early stage startups, because I think the interest in investing is already so high. I think anything that you're seeing with interest rates is blunted by the excitement and opportunity that AI presents. And I think that is such an immovable force or unstoppable force that we've seen that I just don't think the interest rates will matter. But I think what you're seeing with changes in QSBS has a huge impact for 2 categories. Actually 3. It's founders, it's early stage employees, and it's smaller venture funds. And I think the thing that is really exciting about with the changes in QSBS in this new bill, is it extends who gets to participate from those early stage founders to early employees to later employees. Because now the asset cap increased from 50 million to 75 million. So that means if you as a company now raised up to 75 million versus 50, everybody who acquired stock in your business up to 75 million is now QSBS eligible, right? And it has a huge impact on your ability to make more money as an entrepreneur.
I would imagine with higher interest rates for these, collegiate endowments, we'd see less money flowing into venture capital. But, Mike's saying the opposite, that AI is such an exciting and investable hype cycle. And so he's not too worried about seeing investment dollars being pulled from venture right now. And that kind of leads me into my next question. We mentioned earlier about how R&D spending is back. And so my next question for Mike is, with R&D deduction restored, are we about to see a hiring and experimentation surge from cash-strapped startups?
When the change was made in 2017, I don't remember that many people talking about it. So I think it will make an impact, but I suspect it won't have as big an impact on earlier stage companies. I think it'll have a bigger impact on growth stage companies, right? But the change that they made from 2017 to today is they're basically reducing your taxable income if you're a US-based company. I'm sorry, if your R&D is US-based, right? So they're creating incentive for NVIDIA to open their a 9th office in the US versus in Israel or Europe or in Asia. And so, again, I don't think this will impact early stage companies as much as I think it'll impact later stage companies and public companies. But I still think it's a great move.
So like I mentioned earlier, we talked about the AI regulation moratorium on Monday with Kereshishkin. So I wanted to ask Mike the same question in regards to this bill and how it'll actually affect venture capital. I asked him, Trump's bill didn't include the AI regulation moratorium Silicon Valley wanted. Should founders be bracing for a state-by-state compliance nightmare?
I mean, I thought that was the biggest risk that we were facing on AI domestically, right? Was that, like if you live in California, our gasoline taxes are unique, right? And our gasoline formulation is unique, which is why California's gas is the same price as Hawaii's gas. It's actually a little bit more expensive. It's annoying from a gas perspective and it's regressive for lower income folks. But if we had AI regulations that worked that way, it would be a nightmare. And so I think having an overarching policy that makes this at a federal level and not state by state, right? Because Delaware can't write a state level policy for AI or Rhode Island, right? So if Texas or California or New York moved first, it could just set the bar for the rest of the country, and the rest of the country may not want to be regulated by one of those states, right? So I think it's great that we do this at a national level.
All right, so Mike's clear. A federal mandate is what he wants when it comes to AI regulation. And he gives the example of gasoline and how taxes in California are different than taxes in other states when it comes to gasoline. He mentions Hawaii and how gas is even more expensive in California than there. And he said that's kind of annoying. But when it comes to AI regulation, if we had a state-by-state compliance, that would be just a nightmare in his own words. And I wanted to close with this kind of question to Mike. Between Medicaid cuts, EV credit rollbacks, and clean energy subsidy eliminations, are mission-driven startups about to find out how politically fragile their business models actually are?
Yeah, I started in venture in 2008, and I used to foolishly think that the price of gas was really what drove a lot of those clean tech companies back in the day. I think you're right. I think it's such a function of those companies are such a function of the regulatory environment. And it's so much of a, the Lord giveth and the Lord taketh away, right? And I just think it's dangerous to be in a market where you're so dependent on the regulations and how that's going to affect you. And, a lot of the other stuff we talked about, it's certainly, regulations can accelerate it. But, for any type of clean techie stuff, it's really, really hard when you're reliant on subsidies directly or indirectly for your business.
Thank you to Mike Dauber for being on the show today. All right, our next story today, Colossal Biosciences is taking on its next de-extinction mission, and this time it's New Zealand's giant moa. Look at that thing there. The moa, which is a towering flightless bird that stands around 12 feet tall, went extinct around 500 years ago. Now Colossal aims to bring them back using cutting-edge gene editing, sequencing, and partnerships with a New Zealand-based research center and filmmaker Peter Jackson. So I don't know the science super well, but this is basically how it works. Researchers are mapping moa DNA from museum specimens and fossil bones, then inserting moa genes into related birds like emus to create primordial germ cells. These engineered cells will mature into germline cells to host embryos, eventually producing a moa embryo capable of laying moa eggs. It's an adaptation of what they used whenever trying to bring back the dire wolf that we reported on about a month or so ago. And this is a video of an AI rendering, I think from ChatGPT, of what a moa would look like in the wild. Does it move? It moves. Look at that thing, dude. Just legs, no wings, giant body. Here's another picture of, it's like a fake moa with some Maori Indians. Maybe I can't say Indians like that. The Maori tribe of people in New Zealand. another one. I think this is like in a museum. Maybe it's real life of a Moa and a Maori warrior somewhere in a New Zealand museum, perhaps. But funny story, I almost worked at Colossal back in college. I think I was just graduating. This was maybe 2019, 2020, and I really, really, really wanted to work. This is before they even raised a ton of venture funding and had all these, the dodo bird, and before they had the dire wolf, and now the Moa. That was one of my first ever jobs that I really wanted out of college. I was a kid, and I was trying my hardest to get a marketing job there, and didn't get it. 5 rounds of interviews, didn't get it, but it's okay, Colossal. Still love you, Ben Lamb. Shout out Jillian for giving me all those interviews, so it's okay. Final story for today. We are going back to it to close it out. Hiring, poaching, and departure news. Here's what happened yesterday. OpenAI poaches 4 high-ranking engineers from Tesla, xAI, and Meta. So this is an article. The new hires are joining OpenAI's scaling team, according to an internal Slack message from co-founder Greg Brockman. Maybe it's harder to read for y'all, but so the VP of software engineering at Tesla, David Lau, head of infrastructure engineering from xAI and X, the infrastructure engineer from xAI, Mike Dalton, and an AI researcher from Meta. So now they are poaching from Meta now, Angela Fan. So that is the big news of hiring and poaching from OpenAI today. They're finally taking the step of taking people from other companies like what Meta's been doing these last couple of weeks. All right, I had to pull this video, but this is an interview recently of Sam Altman talking about the hiring news and Meta poaching OpenAI talent. So here's what Sam had to say about that in a really short interview. He's wearing Johnny Ive glasses, by the way.
How are you feeling about the battle for talent with Mark Zuckerberg and Meta? Fine?
Good.
And are you concerned about hiring or not having enough people to hire in this market?
I think we have obviously we have an incredibly talented team, and I think they really love what they're doing. Obviously, some people will go to different places. There's a lot of excitement, I guess we could say, in the industry, but no, I think we feel fine.
To Mark Zuckerberg, has he started poaching some of your talent?
I have not, but I'm sure I'll see him this week. I'm looking forward
to retain your talent.
Having a great mission and really talented people, and trying to build a great research lab and a great company too.
Yeah, I'm gonna see Mark around. I'll probably see him around this week. I'm gonna find him. I'm gonna kill him. I'm gonna take all of his people from Meta, and I'm bringing the OpenAI, and we're gonna eat Meta. We're gonna buy Meta, and we're gonna destroy them. That's what he's thinking in his head, not telling CNBC or Bloomberg. So, and then departure news, we have Apple COO Jeff Williams to retire in a major changing of the guard. Apple COO Jeff Williams is retiring as the company's longtime number 2. Apple said yesterday that Jeff will step down as COO this month and retire later this year. Until then, he'll continue leading the design team and health initiatives, but Sabi Khan will succeed him as COO, and the design team will now report directly to the CEO, Tim Cook. So, Jeff, goodbye. So long, farewell, my friend. Thank you for your service. It's sad to see, innovators leave the industry. It's sad to see, trailblazers, shakers wrap it up. We need a jersey. We need a Jeff Williams jersey hanging from the rafters of the Apple Arena in Cupertino. We need that. That is it for Venture Daily. Thank you so much for checking out the episode today. I hope I helped you get a little bit smarter. Thank you to Content Stack for letting us film here every single day in Austin, Texas at the Content Stack Experience Center. We really appreciate it. If you like today's show, whether on YouTube, Spotify, Apple Podcast, or X, leave us a like, a comment, and a review. Throw us a 5-star rating if you think we earned it. And as always, I'll see you tomorrow morning here at Venture Daily.